I think it's important to note that, business owners typically, you have your CPA. You have your preferred CPA that you've used every year. They're focused on compliance, filing your tax forms on time, keeping you in compliance, and all of that. We're solely focused on this particular tax credit. And so I think a firm like ERC Pros, for example, can really complement somebody's existing CPA.
Yeah, that's a really good point. I mean, we work with CPAs all the time. That's the nice thing about this credit is it really is an independent credit in terms of how new it is. It's not something that everyone has an expertise in. The tax code's pretty complex as it is, and now we're just we have a new credit that we've added to this complexity. So CPAs, they have their 315 filing deadlines or 415 filing deadlines, and they have a lot to do already within that. This payroll credit has a very different timeline. It's something that they're not used to focusing on in terms of a deadline necessarily. And we have our own CPAs in-house that we use as well in order to calculate the credit, make sure that we're maximizing it, properly substantiating it. So we work hand in hand with your CPAs and accountants that you already have as kind of a nice little way to ease the pressure off of them for making sure that they're doing it correctly because we're the experts in this.
Yeah, and the other piece of that is it's important for us to work with your CPA and for you to continue to consult your CPA on sort of broad tax matters and, coordinating the retention credit and any tax implications and other things that it might impact, with your business and your tax situation. It's important for us to work with the CPA as well.
Yeah, exactly. We would never want you to change your CPA relationship or do anything because of your, desire to take the employee retention credit. If anything, it's something you should definitely inform your CPA about and, make sure that they understand that this is something you want to pursue.
And one other thing I always like to note is I think ERC Pros is unique in that we focus on this tax credit specifically versus, if you think back to the timing of when this came out, when the CARES Act was passed and the pandemic began, CPAs and tax professionals across the board were still sort of reeling from the TCJA, the Tax Cuts and Jobs Act, and figuring out how some of those new tax credits that were in that were going to be interpreted by the IRS and how to apply for those. And so it's like, then this comes out and now CPAs didn't have time to, they're trying to meet tax deadlines and still figure out things like qualified opportunity zones, 199 Cap A and all of that. And then, that's where we can step in because we've solely focused on this since March of 2020.
Yeah, when I was working with CPAs and taxpayers in 2020, a lot of them were using their CPAs as a crutch, if you will, for just filing for the PPP loan. Like CPAs were knee deep in terms of learning the CARES Act and learning the PPP loan program. They didn't have time necessarily to investigate into the ERC credit to the extent that we have. So again, we have our expertise on not only on the accounting and CPA side, but also on the legal side. We want to make sure that we're adhering to the law, properly applying any case law in the realm of tax, and making sure that we're maximizing the dollar for our clients.
Yeah, and there have been multiple updates to this since it came out with the legislation, different pieces of legislation that have changed it, enhanced it, made certain things retroactive, multiple pieces of guidance from the IRS to clarify how things are going to be interpreted. And so I think it's just important to note there's been a lot to keep up with since the CARES Act was passed.